Good afternoon, everyone. A quick afternoon comment. We had multi-year record type style inflation in the US on Friday, up 6.8%. We had terrible consumer sentiment data, and we know the Fed's meeting this week and is likely to accelerate the pace of tapering and start to talk a lot more about raising interest rates very early in 2022. And on the basis of all that, most markets are consolidating. Gold, oil even, currencies, but US stock market, it's on a tear higher. There's nothing can stop this market. I mean, there are all sorts of factors that come into place here, but among them, I think, are obviously share buybacks. So share buybacks have just accelerated out of the pandemic lows in 2020 and just keep on going through the roof. I'm sure it has nothing to do with the fact that CEOs are now rewarded based upon share price performance. So it must be rather tempting as a CEO to use the shareholders' money to buy back your own shares, boost the stock price, and get an even bigger bonus. What a lark! But I'm sure that's not why they do it. And there are certain politicians in the US too are starting to voice concerns over this buyback frenzy. What is it really doing? It's not helping the company in terms of the funds it's got available for reinvestment. So they're hoping to put a 1% tax on that in the not too distant future with the infrastructure bill, I believe. But a lot of people think that won't make much of a difference, a 1% tax. I mean, again, it's just the shareholder paying it, and you can get a big bonus as a CEO by buying your own stock. Apple has further plans to buy another $60 billion worth of its own stock, it's recently announced. So even Hertz, a company that's just come out of bankruptcy, is spending $2 billion on buying its own stock. So we have fear of missing out, buybacks, companies buying back their own shares. We have central banks buying the bonds of governments that go into debt. It's a crazy world, and stocks are on a tear. If I didn't know anything about the fundamentals and I was looking at the US stock market price action at the moment, I'd be saying that, gee, that NASDAQ, if it breaks that resistance barrier just above where it is now, it's going to catapult higher. But then I look at the fundamentals and it's all such a nonsense. But then maybe that's what I'm missing out on. It's basically just buy anyway. Do you know that one of the two biggest fund managers in the US recently launched an ETF called the FOMO ETF, the Fear of Missing Out ETF. And it basically has a lot of those popular meme stocks that many retail investors like at the moment. And the money's flooding in. And it's simply called the Fear of Missing Out, the FOMO ETF. So it's never been easier for people in the financial markets, in the industry, those fund managers, to make money. They can make money without doing any work at all almost, just come up with an interesting label and an interesting plan, and people throw money at you. Reminds me of a lot of the recent tech sort of sector activity. Come up with a cool name, come up with a business plan, and people throw hundreds of millions, if not billions of dollars at you, and they will keep throwing more money at you if you lose it all without having any profits. So where's the downside? We've created a world where there's no downside risk, and that's not healthy because it does engender eventually, but maybe, who knows, maybe I'm 30 years too early. Maybe the market's going to be a sell in 30 years' time.